26, just a few minutes, 10 minutes actually, after 12 noon. It's a Thursday, and here we are with another edition of Chart the Markets. And we take this time to go over all tickers, not just stocks or commodities or crypto or ETFs. Doesn't matter to us. And the reason it doesn't matter is because price will behave the same way on the chart, no matter if it's a chart of oil or a chart of Bitcoin or a chart of IBM or anything else. And that's really the cool part about what we do. Our job is not to front run the chart, any chart. The job is to follow the chart. We often talk about our T-line being yellow and kind of jokingly say, follow the yellow brick road, right? Up or down. This is one of our trend spider charts of Bitcoin. The yellow brick road, the T-line has told you where to go. Just follow it, and it'll take you to the pot of gold. Now, just follow it to the downside, you still get a pot of gold. But the takeaway is to follow it and not to front run. And we have the ability to allow, to read price through our candlesticks, but we also combine that with the ability to read trend. And when you are on the right side of the trend, following the chart becomes a lot easier. This is an example of following that yellow brick road and just following the chart and doing what you're told. You were told to sell, so that's what you did. No reason to worry about these green candles that show up in a larger downtrend. They are simply green candles in just that, a larger downtrend. Going back here, what have we been talking about for weeks on end? How price is going to react to resistance differently after this big move down, and that it's going to be a period of adjustment for many to get accustomed to the test fail reality. We use our charts to help us understand where price may go, and we have a handful of rules that we use over and over again to help us track price, to help us find opportunities on the chart where price may go, and simply overlay all of these things to create one powerful setup and system. On this particular chart, you see a volume profile. That little purple line, anchored VWAP for volume. This funky looking blue line up here is the anchored VWAP for price. And then every other average is the same as what we use always. 20 is green, 50 is blue, the 100 is purple, the 200 is red, 500 is pink, and 1000 is this amber color. And we use these long-term averages. Why? Because they help us create a range for price on shorter time frames, as well as provide significant levels of support and resistance that will quite often be the equivalent to decades worth of compressed time. We've been talking about this 500-day moving average, and that this test fail will simply come back to appropriate levels in order to gas up and try again. And we talk about every stream first touches typically find significant resistance to take a pause, or they fail. And that's what you saw here at the 500. And that's kind of what you're seeing here again. And we talked about this earlier in the week. Here's your 100-day moving average. It would be the first attempt if it were to break through the 500, which it did. And we should expect what? A little bit of a pause or a rejection. And that's exactly what we're getting. The objective, if we were long, so if you were to take in this buy signal, you'd actually still be in the trade because you were never given a reason on the chart to exit. But where was the opportunity? The opportunity was this gap. And that's why we use these volume profiles. This is an example of where money has not been. And it was created by this kind of capitulation to the left. So it's just sell, but there's no substance to those candles. And then here we are a little while later with an opportunity. All these big sell-offs and all those big moves higher will create opportunities in the future. And now you're facing that future. And this is what we've kind of been waiting for. And this has been a great example of how time can stand still for you. Right? This process of trying to break through this level can be really frustrating. But the rules are still applying. And here you are trying to break through this particular level, wanting to get into this gap because you know if you do, there's nothing in your way to shoot up here to the 200-day moving average and the anchored VWAP for price. And this is really interesting that the two of them are creeping along parallel, because that's a significant draw for price if it was to break through. And this thin white line on the volume profile on TrendSpider is the VWAP. So, hey, does it make sense that if you were to break through this level into the gap where you know you're going to find very little resistance, that you would be attracted to that level up here? Sure. Makes perfect sense. And keep in mind that you haven't been given a reason to exit the trade. At major moving averages, you can always anticipate with relative reliability some support and resistance. When you blow right through them like they're not even there, well, that's a different conversation. But I think that's what you're seeing right here. And the upside is clear. Get into this gap, look to the VWAP and the 200 MA and wherever that anchored VWAP for price sits, 105.455. That's the upside. I don't think we're going to chatter sideways with a gap like this. You know, you're either going to jump into it or you're going to fade this level, because that's the downside, right? That you hit something for the first time, you have a higher probability of failure. And if you do fail, where do you come back to? Well, you can anticipate the 5 EMA and or the T line. But if that divergence sticks, you know that the trend is still in place. Right? Makes perfect sense. Now, if it fades and breaks that level, however, what's down below? Well, this is the lower value range. And then you have the 20 and 50 MA down here, as well as that anchored VWAP for volume. And you can see how price has respected it, you know, almost to the penny. So that's your downside risk. How do you figure out maybe what's going on a shorter time frame? I think you just drop down to the 4 hour. Right. So now what do we have on the 4 hour? You remember those long-term averages that we talked about, how they can give us targets to the upside and they can help us kind of frame in ranges? Well, here's the upper side of the range. Keep an eye on that level. And as price, you know, on this 4 hour chart, there's your buy signal. We got to love this, right? Where does it come? Right at the upper value range. Like off some serious consolidation, bang, you get a signal. So what's going on in here? Accumulation. Right? And then you can't hide the accumulation anymore, and it starts to show up in our indicators. So now we have that divergence that we talk about. The price starts to move higher. That divergence is momentum. Little pullback candle kind of as a retest right back to the upper value range or lower value range, whatever that is. Bang, price goes up. Breaks through the 50. Chatter for a little bit, right? Which is to be expected because it's a major moving average. But what doesn't happen? This is your edge. This divergence does not break. So you're chattering here at the 50 and actually at that anchored VWAP for price as well, which is the highest high. You're chattering along that level, but the divergence to the upside is not breaking. And this is when you have every right to say, I don't know what's going on here. Is this just going to ultimately fail? Or you just don't know. this adds an effective tool to your toolbox, allowing you to manage price action with an understanding of the direction of trend. And if you don't find that helpful, then I don't know what to tell you. Because that's where most of us get lost. What's the direction of the trend? We get caught up in all of that chatter of what's going on a daily basis. And it gets a little bit confusing. So let's change our screen here for a little bit. Let's look at the weekly Bitcoin chart, because we've obviously checked this one out for quite some time. And here we are maintaining support off this 100 MA. So this is a fractal example of what we're talking about: breaking one level, finding the next, breaking one level, finding the next, right? You're hoping that the first touch is going to provide you with the support that you need, right? So it looks like it's done that. And this is the upper value range, by the way, here. Up here you have the 20 and 50. What's the target? Just the next level, right? This is just a game of levels. Levels up, levels down, and sometimes you can go through those levels with some acceleration, and that's where the gaps come in, right? This is nothing holding up price up or down here when it's going to get rechallenged or retested. Do you have a buy signal on your weekly chart? No. I think we talked about this either late last week or early this week. You could have this weekly candle reach up here, tag the 20 and 50 MAs, which in both cases would be what? First touch. First touches have a higher probability of failure. And if they were to, so in other words, this candle could reach this level and still not trigger a buy signal, still not provide enough momentum to reverse what you see here. And in essence, tags this level and gets resistance and then fails. Then you actually come back to a second test of this 100 MA level, and then we're going to have another conversation about, will that second test survive? So this is kind of really interesting for us, or for me anyways. Love to see how how price reacts to these levels. And it helps us manage what we see on the chart. Now, we believe in, three pillars: fibs, fractals, and filters. And if we use fibs on this weekly, let's just grab the top wick to the bottom wick, and we're looking for, what might a retracement or an extension to the upside rather look like. Well, here's 50%. That's what this green line, this little thin green line, that's 50%. And then over here is our 618, which is kind of lost in the wicks of these candles for you to see, but that's this level up here. So is it unrealistic to think that, if we got an extension back up into this range, that's not unrealistic, right? So let's keep an eye on what happens with price when it gets to this 20 and 50 and 50% range on the fibs. We might have a wick extend, hit that 50%, the close below the 20 and or 50, and then all of a sudden we're having a different conversation if you don't break through. Upside is you do break through, and then what are you doing? Looking for previous waves lows, or highs rather. So that's the exciting part. But this is where you get stuck though. Don't front run the chart. Don't get overwhelmed with excitement that, oh my gosh, you hear the downside, but it doesn't register, it doesn't get banked, as all you hear is opportunity to the upside, opportunity to the upside. Right? Be indifferent to price and pay close attention to trend. Right? When I say be indifferent to price, don't get hung up on whether price goes up or down. That's irrelevant, because you have the tools to monetize the chart up or down. So Bitcoin's weekly chart is looking really interesting. You can see the continuations you got from the 50. Are we going to get that same kind of price action off this 100 level? I don't know. We're going to find out. But how price reacts to all of this does not change, and it doesn't matter what we're looking at. It just does not. We told you to be careful about longing into resistance, and this is why. Do you notice the distance between price and the 5 EMA and the T line? Creates a bit of an air gap there. Price doesn't like to get too far away from it. It doesn't mean it's going to roll over and retrace completely. It just means that that horse wants to come back to the barn. The horse doesn't like to be too far away from the barn. This brings it back to the barn. This could just be a simple matter of price hitting a resistance level, getting a little too hot, coming back to the T line, 5 EMA, tagging up, taking another run, and then breaking through. But understanding what the trend is doing is going to be your edge. It's going to prevent you from closing a trade. It may entice you to add to a trade. But you have to understand where the trend is. Right now, as long as this is diverged, although this is resistance, this is still a bullish chart. And again, the opportunity to the upside is huge if you can get into that gap. Right? So that's Bitcoin. And I have a sneaky suspicion that what we're going to see on a lot of our charts is going to be eerily similar. Now this is ETH. And on ETH's daily chart, here we are, first touch of the 100 MA, getting a little bit of that first touch type resistance. And it's almost like an allergy, right? Like look at the 50. Wick the 50, completely retrace, go through the whole thing again. Here you are. Nope. Right? Finally get a breakout here. And now struggling with the next level. Right? Nothing goes straight up, nothing goes straight down. It's kind of an evolutionary process. And this chart is really no different than Bitcoin's daily chart, is it? There's price coming back to kind of wick the 5 EMA. You want to break through this level to get to this level and get into that gap. It's probably going to look very much the same on the weekly. It does. There's your target, the 20 MA. No different. But don't front run. Back up to the 4 hour on the daily. What do you see? Blow through this level, which is great. Are we a little extended from the 20? What happens when you're trading above all your major moving averages? At some point in time, you just start looking over your shoulder going, oh, I'm going to come back and tag one and might not hold. And this is kind of one of those examples where you get lift off, you break through, but you're a little extended and you may want to come back. And this actually looks like where price and time are waiting to touch each other, one not taking the lead, right? So price just kind of hangs. Be very careful of this first touch of the 4 hour, because if it bounces, there's a big gap for it to bounce into, and that's why we're using this fractal analysis, so that we can look above and beyond about of what we're trading. Solana, my guess is again going to look quite similar. Here's your 4 hour Solana chart. All right, so struggling with basically the same MA, and now we're printing a sell signal on this 4 hour Solana chart. So you've failed, or are failing, I guess, and this is still in play, but I mean, it looks like you're failing the 20 and you're failing the 500 MA on this 4 hour chart. So if you break one level, because everything is fractal, you find the next level. The next level is the 50 at 139.90. So you're desperately trying to hang on to this 20. Failing it brings you back to the 50, but it's not the first touch. You've had, it looks like 2 here, right? So do you get another bounce, or are you looking for the upper value range and the 100 MA? What is this level? 136. What's 136 on the daily? Basically the 20. So first touch hasn't happened on this daily chart. You came back to the T line, wicked it, but you're still trading above both these levels, and the divergence is still in play. What's that tell you? It tells you that this trend upward is still intact. What's the upside opportunity on the chart? Break through the 100, and you appreciate that it might not happen in one candle, right? Pat yourself on the back that you have no expectation of things happening every time you blink your eye. You know it's here, and you know it has the potential to provide some resistance. You know the gap is here, you know the POC's up here. You have the 200 and 500 MAs basically riding parallel together, so you have a lot of draws for price to the upside. You know what your targets are. And that's all great, right? That we know what our targets are to the upside. But let's just hit reverse and pause here for a second. Look where you got in. December 31st. And it's January 15th. We're not talking about getting in here or getting in here. We're talking about getting in way back here. Just because we're following the chart. Just doing what we're told. Understanding fractals, wanting to try and find a sneaker entry, sure, we can back up a time frame. But just off the daily, there's your entry back on the 31st of December. Nobody's thinking about what price is going to be doing on the 15th of January at this point. They're just worried about the party that they're trying to get to. Good entries are a key to reducing your stress levels. Right? This is a great entry on this chart, and all of the daily drama is irrelevant. These red candles, they're simply, for now, red candles in an uptrend. All right, we're in an uptrend. Where price might be going? Well, let's look for other levels. Either benches of past price, major moving averages, elements within the volume profile. It's not that hard. We know what happens the first time we touch them. We often pause, get a rejection, back to where? Well, okay, another level. First time we hit it, yeah. If it was to bounce, would it be the first time we reached that level? No. Higher probability of going through and reaching those goals that we talked about. This, the gap, all that stuff. But just follow the chart. The trap is trying to front run, at least in my experience. Right? Front running the chart can be the kiss of death. This is Monero. Daily chart, and I know we looked at this chart the other day. And people often talk about, when our little system that we use, well, does it give you a heads up in plenty of time before the big move happens? I've had this asked of me, like, in positions when I didn't know actually the outcome on the screen. And I'd be crossing my fingers when I'd have to go look. But this is an example of what we're talking about. This is, what day is this? 6th of January. 5 days later, price starts to go parabolic. Did I have any, or this, the script that we've written, have any insight knowledge into what might be going on behind the scenes at Monero, with Monero? No. All it's doing is reading price action, and with a few other things going on in the background, trying to filter out signals that might be false, so that you have what ultimately becomes a safe and profitable entry. So now you're in the trade, and we know that we like to buy off the 50. This just happened to produce a signal at the 50 in and around, so that's great. Happy with that. Now we're just reading price. We can see the divergence between the T-line and the 5 EMA. That's giving us the understanding of momentum. We know that price is extended, right? Like it's pretty hot. Horse doesn't like to get too far away from the barn. This one did. Actually wicked the upper value range and is resting on the point of control. Notice how price didn't make one big dagger down. Like so far, as long as this sticks, I actually interpret that as bullish, because This just could be a situation where we fill this little air gap, price will come back to the T line or the 5 EMA, and then continue on, and price, this divergence never broke at all. So we'll wait and see. But here's a gap, right? This gap that's created right in here. Let's not forget this, okay? Because this big move upward is what's created this gap. So at some point in time, we're going to come back and retest this gap. Fibs, fractors, and filters. Let's throw fibs on this. I'm just going to grab down here as the swing low, swing high. Where's 618? Here we go. What's that? 562. That's a 618 retracement, if we're assuming that's the high of this move. That brings you back into that gap. Once you're in the gap, all bets are off. Like this, you see the 20 down here? If price was to come back to the 20, then you literally just ate this whole move on a retracement, which we see quite often in this space, right? And on the crypto side, you see those moves get eaten up all the time. Now, do you guys have an idea of what happens when the chart goes parabolic? Absolutely. We've seen it a million times. It just keeps looking for these levels. It's just going to feel more extreme. When it does it like this, no one pays attention. But when it does it like this, everyone pays attention because everybody feels it. So if price was to break the 5 EMA and the T line and all that fun stuff, where does it end up? Somewhere around the 20. That's what you look for. Time and price will find a way to come together. And if we're going to use some fractal analysis, let's pull out a weekly chart. This is still an incredibly bullish chart, obviously. Downside risk coming back to these levels on a weekly. But I'm not feeling like it totally wants to fade yet, to be honest. Doji at the top of a bull run should always, get your attention. But it's not feeling like it wants to roll over quite yet. Of course, I say that, tomorrow will show up and it'll be a big red candle, right? Let's look at something I was looking for. Apple. Because I think this Apple chart makes us look really good right now. So we've talked about this daily for a while. Nobody wants to do what they're told when it comes to Apple, right? Nobody, and I get it, right? Nobody wants to short this thing instinctively. But it did produce a sell signal. And if you took it, would you still be in that short? Or however you decided to play it? Yeah, you would be. We've talked about producing a sell signal before the real meltdown starts. So you're in early, broke one level, and when you did that, so blow this up a bit. When you broke this level, notice what happens, right? The T line and the 5 EMA open up and you get this massive divergence. That's telling you you made a good decision. The trend is your friend. Don't get freaked out by the green candles in what is a downtrend. And just for a second here, think about what you're looking at, understanding how we like to trade or like to interpret price on a chart. Fail one level, there's your 20, you're coming back to the 50. And you can expect to get a little bit of support from the 50, and you do. But the divergence, if we take the candles off, and this is what gets confusing, I think, for a lot of new people, a lot of new traders, at least a lot of them that I see. Taking these candles off, leaving the averages on, you could even take them off. But for our purposes right now, we're just going to leave them on, take the candles off. There's your sell signal. And here's kind of in here where price really, that big red candle showed up, somewhere in here. Now, if you look at this, you know that you're sitting here with the 50. And when you take these candles off, you can still see the divergence to the downside. Right? Like this never broke trend. And when that happens, that's the market's way of telling you that you're on the right side. And as long as you're on the right side, you can stay in the trade. Now, here's the 50. You're expecting to get support. The candles showed us that we did. But does that divergence staying intact, what does it tell you? It tells you that the probability of breaking the 50 MA is pretty good. If that divergence had closed or hooked up in and around the 50, showing me that there was a movement in price that had enough momentum to do that, I wouldn't be telling you what I'm telling you right now. But because the divergence never broke from the time that you got a signal, know that as you're approaching a major moving average, in this case it's to the downside, without looking at any candles, as long as that divergence is intact, there's a pretty good chance that you're going to continue to break down. And here you are now at the 100 MA. Do you think that there is a pretty good chance that this thing might break down further? Yeah, I think so. How do we know that? Well, we can see the divergence is intact, so we know that. What's all this to the right? That gray, that's light trading. That's thin volume. And when you're trading in that thin volume, all of the other things that we use to determine what price may do, the effects of those are amplified because price can just fall through there really quick. Even quicker when there's gaps. Why did price dump? Like this gap. See this gap? That's what it's from. And it's great to see them, how they're created, because you know you're going to get to play them later on. Right now, I think we're going to, it looks like we want to fail this. And we look to the downside, and if we fail it, we're essentially kind of hanging around this little shelf area in here, right? That's why this is getting chewed up. Got to chew up this shelf in order to get into the gap. And there's your upper value range. And there's your 200. Do you think these are a draw for price to the downside? Sure they are. Is it unrealistic for price on a daily chart to come back to the 200? Of course not. Here's your weekly. This, see how price got really far away from the 20, right? So those kind of moves, when they come back to the 20, if they bounce hard. But if they fail, they usually fail hard too. And right now, that looks like what we're doing. What happens if you fail one level? You find the next level. So here we have one candle close on a weekly below. Let's say, we get another one. That's 2. Does that not make you feel like the 50 down here is more and more likely all the time? Yeah, it has to. Break one level, find the next. Look at the point of control way down here, some gaps. Like there's downside risk. If price bounces here, what happens? You're looking to do what? Take out those previous highs. And if you don't get support, you just continue to look down and to the left until you can see an area where you might get it. Where's the most concentrated area for price? The POC. And volume, rather, is the POC. There it is on the daily. Did you notice something? Interestingly enough, so the POC level, it's actually a structural level. Right, there's kind of tags in here too. Picks up the bottom in here and top in there. So don't discount these things that look improbable. Right? And to give you an example of another stock that may feel that way, Microsoft. Now, this is a funky looking chart, but I mean, when you were up here to tell everyone that you wanted to come back, you were going to break the 200. That puts this level in play, by the way. Nobody would believe you. No one was going to say, hey, we're going to go from 555, 560 down to 460 in the matter of like a month and a half, 2 months. Was that improbable? Sure. But price told us otherwise, right? Price and trend was telling us otherwise. At no time on this weekly chart, once you got your signal, and this came with a big dagger that broke a major moving average, opens up your T-line and your 5 EMA, giving you the cue that, hey, the trend is down. I didn't look at this chart actually today, but here you are. We've broken the 50 MA on the weekly. Now I talk about, when you come back to these levels, expect to chatter. Look, price never really even hit it, but if you get a candle that blasts through it like it wasn't even there, that's another conversation. Well, let's have that other conversation, because that's exactly what this did. These gaps to the right on the volume profile are incredibly powerful. It's either going to suck price up or suck price down. That's what it's going to feel like. In all likelihood, price is looking for this level here. And in all honesty, probably the point of control. Unless a bunch of money comes in and changes the mood. And if you don't hold this level, what level do you look for? The 200. It's not inappropriate to come back to the 200 on a weekly chart or really any time frame. But when price, only goes up, and that's what most people are accustomed to, these downside moves are really tricky. The daily will cause you fits, especially when markets are volatile, like they are now. But this weekly chart, for as volatile as the market is pretty clear. Does not want, or has not given you, any reason to go long. These green candles, and every other one for that matter, look what happens as soon as it pierces the T-line, it pulls back. And then you just have these continued closes below and trading below, right? You're not front running, you're just following. As price approaches this major moving average, which is the 100 MA on this chart, with this type of divergence open, are you more or less likely to believe it may fail? Probably more, especially when you understand that this POC is also a draw for price. And this, the POC is essentially just the largest shelf. That's where buyers and sellers have shaken hands in the past. And in the event of a move up or down, those are the areas that price are going to be drawn to, where buyers and sellers have shaken hands in the past. We just continue to break one level and find the next until the trend can be reversed. Let's look at Walmart, because I know we looked at Walmart as well. This is a weekly chart. Let's look at the daily to start. So just to give you an idea, it's a massive move higher. Right? Massive move higher that goes back years. Let's smooth out the noise and we'll just use the weekly. Now, one thing we know is that, eventually when you're trading above all your major moving averages, all of your support, which is bullish as hell, I get it. But at some time, you have to appreciate that price will come back and check those levels. And part of the reason I do this is because this is a tool, or the risk mitigation part, that nobody wants to talk about. Everybody just wants to talk about the price is going up, blah, 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 which is great. But at some time it's not, and when it doesn't do that, you don't want to be the one stuck without a chair when the music stops. And you want the ability to monetize the chart on the way down. So, Walmart's chart, if things were to go sideways, or, people fall out of love with the stock, what's it going to do? Expect it to come back to the 20 and or 50, but let's get into the real goods. If you kind of break this upper value range, because remember, this is all light trading, right? This is all exuberance. This is the opportunity. Anything in here to the downside. So if I was looking to go short, once I would have a reasonable signal to do that, I'm not going to do it without the signal, right? Is this a bullish chart? Yeah. So I'm not going to short this chart, right? I'm going to short it when the market tells me to short it. I'm not going to front run it, right? That's what I would be doing. But if I come back to the 50 and fail, so I know that if I break this level and I'm looking for the next one puts me in the gap. That's the opportunity to the downside. And this is an example of where all those things that you didn't think could happen could happen. Tons of consolidation. Price has gone parabolic. That's just for you-know-whats and giggles. Let's do this. There's 618. That's 76.96. And 50% at 85.30 on a weekly chart. In other words, there's opportunity. And I don't care why the opportunity shows up, right? I don't care why. It's what the chart says that matters. Even if I might just want to take a peek at the 4 hour because sometimes it's going to tell us things. This one just tells us that it's still a bit bullish, right? Yeah, it looks a little toppy, but this is all open. That's all bullish. You're trading above everything, all bullish. If you were to come back and fail, you'd come back to this level for a test. Fail that, you know what's going to happen. Having the understanding of what price may do before it happens is going to save you a lot of grief. Remember this chart? We haven't touched it. This is our MicroStrategies chart. This is the 1,000-day moving average, and we just kind of quickly extended, what it might look like. Well, what do you see on the daily? We barely missed it down here, but here's your first touch of the 50-day, or not first touch, but here's a touch of the 50, right? Here's your first one, failed. Here's another one, not looking too promising, at least today. If you fail this, if this is a failed breakout, what do? You come back, you take out the previous wave's lows. Here we are on a weekly, just to give you an idea of how close we actually came, right? That's a big push to the upside that would be required to change the trend. This is where up here we said look for down here. Did we find it? Abso-friggin-lutely we did. And we're not doing anything magical. It's not. There's no crystal ball or nothing like that. It's actually not that hard. Current price is going to look for past price. When this gave us our sell signal on MSTR, did the market at any given time between here and now give us a buy signal? No. And all the stuff we hear in between is just nonsense. I don't care. I'm glad you're using air and your heart's still pumping and you can talk and all that stuff and tell other people your point of view, but at the end of the day, I don't give a shit. Because all I care about is what price does and what trend tells me. That's it. Because all the other stuff is just noise. Just noise. At no time, way back here, did you get from any indication to get out of this trade. Take all the averages off your chart and this is just one big downward spiral. Doesn't matter what it is. What's the upside opportunity? Well, you bounce up into this gap. What's the downside risk? You break the 200 and fall into this gap and come all the way back to where you started, to the 100. It's just a chart. Doesn't matter what it is. I don't care what Michael Saylor did today, yesterday, or the day before, or who he told and how many people he told them or how loud he said it. Doesn't matter to me. I don't care. For all these people that get all excited about what other people say, take a breath. Worry about what you think, not what other people say. And if you're uncomfortable or don't have the confidence to do all of the thinking here, then just block out all that other stuff and just look at this professionally, like it's a job or your favorite sport that you want to play. This is a hell of a lot of fun if you let it, right? And it's not about being right or wrong or anything like that. It's just simply following the chart. Price will do what price is going to do. It doesn't have to do anything. We just follow it. I'm not going to get inside the brain of the market. I'm a dumbass. I just follow the chart. That's it. Oh, there's a sell signal. Fine, short. No reason to get out of the short. Oh my God, price just went capitulated. No idea that's going to happen. Is all I know is that you should be short. It's as simple or as complicated as we want to make it. And has price recovered? Remember, everybody was, oh, we snapped back up to here, so we really didn't give all that much away. Well, where are you now? Right? You're well below all of those levels. Nothing's changed. Nothing. Has the chart given you, since the big sell-off day on the weekly chart, any reason at all to long yet? Not on this time frame. The downtrend is still intact. Look what happens up here. The weekly chart wicks the 20 and what kind of doji do we call this? Anyone? I know someone in here knows. It's a gravestone. It's about as close to a gravestone doji as you're going to get. If you can find Stephen Bigelow's, whatever the thing is called, 12 candlestick patterns you absolutely have to know, it's in there. It's a little tell. This big wick down is just sell, 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 sell. To be technically perfect, it would have to be at the very, very, very bottom, which it's not, but it's certainly close. And if this is a failed breakout on a weekly chart, remember everything is fractal, take out the previous wave's low, and probably what it's going to be looking for is this level down here again. Like we already called this level, this 161 to 190 level. Well, we're playing within it. That's where it brings us back to again. And this is where, the excitement that we see on a few days of charts can really, really, really mess with our heads. This is Zcash's daily. Now, we've obviously looked at this chart before. And we put this level in ages ago. And look where we're kind of bouncing again. Why? This is structural. Right? There's support. Resistance. Resistance. Upside, what do you want? You want the 20 and you want the POC. The risk, you fail the 20 if you get there, or fail this level, and you just start looking for the previous wave's low. If this is just rinse, repeat, and there on the daily is the 200 that's going where price and time will want to find a way to come together. You broke one level, you found the next. You broke that level, you found the next. And because you've broken this one, it does put the next one in play. And here we are. These, 4 or 5 days of upward momentum here. Was it enough to kick the trend higher? No. Just reverse all over again. This is still a downtrend. Yeah, green candles, but this is still trending down until it breaks. And sometimes it's hard to swallow, right? When you're one way and your price starts going in the other direction. And knowing, though, the trend is still intact, it's hard to watch that sometimes. Not that you should be chart watching anyways. But if this is a failed breakout, you're going to come back, take out this low, and probably look for this level and this low. And because everything is fractal, maybe the 20, because we really haven't hit it yet. 3 weeks of movement higher. Did it break trend to the upside? Nope, didn't produce a signal at all. Is this your first lower high? Yeah. Downside risk, this gap in here. Like, I hope this is an example of price, people waiting for what feels like ever, and then price going parabolic, and then it just gives it all back. I hope that's not the case, but what you're hoping for is that you get a bounce from the 20, price starts moving higher, and then you're looking at, again, the next level up. Okay. B&B, where are you? Notice on on the main, like on ETH, Bitcoin, B&B, here we are at the same level again, right at the 100-day, getting a little bit of resistance. Price is kind of eaten up the majority of this gap here, right? That's what you wanted, and it's done that. So now you're seeing a little bit of resistance. This move, however, even on B&B, this is still bullish, right? Divergence is up with your T-line and 5 EMA, and you're trading above the 200 and the 20 and the 50, and you have this as obvious resistance. If you do pull back, there's a lot of support here that you would hope that you would find, right? Either from the 50, the 20, the 200, in order to get, if they pull back, gas up, take another run at that 100 and break through. And then if that was to happen, well, there isn't a heck of a lot in your way, is there? At least not on the daily. There's your weekly. If this thing does catch fire, there's nothing in its way except past price, breaking through levels. But if it is to break through here, it's going to want to take out that previous high, which that looks attractive, doesn't it? When you look at it from that standpoint, it looks very attractive. Let's look at gold and silver. Let's start with silver, because it is the talk of the town. This is the daily chart for silver. And again, a great example of price going parabolic and what it does to all your averages. It just fans them out like this, with the shorter term averages being the first ones to move, obviously, because they're more responsive to price because it's over a shorter duration of time. If you just took the signal and followed the chart, you just don't know nobody knew that price was going to go parabolic. There was no memo that went out. There isn't. There might be conditions that you think are good. That's great. But at the end of the day, we're just doing what we're told. If you were to buy this signal coming out of consolidation here, it actually would have paid. These ones, a little choppy. They're just trades. This is a runner. And on the daily chart, you could have held it, all the way to here till you got your first signal to sell. But you're a trader, so you're not worried about, okay, so I sold, but price bounced, then it went up again, oh darn. Well, no, you have an opportunity to re-enter the trade, right? You don't know how do you not know that this one is going to be exactly what this one did? You don't know. Right? You just take the signal when you get it. Protect yourself from risks. In other words, set a stop, for crying out loud. Like, please. Okay. And follow the trend. And if you were to take this signal on that daily chart, would you still be in this trade? Even after these days of chaos? Yes, you would be. And on the weekly chart, because everything is fractal, you're going to see on the weekly chart that you could have bought back in April, and would also still be in the trade. This is why I like the weekly. It's less noisy, and it's really nice instrument for trend. But yeah, this is how to take the stress out of your life. There's a nice weekly signal, boom, price went higher. And there is no sign yet on any time frame that makes me think that this is softening at all. It just still continues to look like it wants to move higher for now. So we just do what the chart tells us. We have no real explanation for why it's gone up so much. We can hypothesize some of it might actually be accurate, but at the end of the day, we just follow the chart. Gold is another example. It's gone pretty much straight up for quite a while. Let's take out the noise, go to the weekly. This doesn't show on any time frame any signs of wanting to have any kind of major reversal. And when you had weeks or 2 weeks of consistent selling, didn't break trend, not at all. Not at all. These candles here, and I think we showed them on something else earlier, where you create that space where there's a little bit of air, right? That's fine. It came back and checked the T-line, just like we kind of hoped it would, but it didn't break trend. The trend stayed intact. So all this talk about, sell your gold, buy this instead, gold's going to blah, blah, blah. No, that's not what the chart is saying. That's what some guy is saying. And which one is more important to you? What that some person has to say or what the chart says? The chart gives you the ability to think for yourself. And unfortunately, that is something that seems to be dying, is the ability to think for ourselves. You don't have to be reliant on what other people say. You just have to do what the market tells you to do. That's it. Let's look at oil. Right? And unfortunately, or fortunately, depending on how you want to look at it, does oil disappoint us technically on what it does? Not at all. Like, this is obviously today's candle. This is yesterday's candle. This is the doji at the top of a bullish run that wicks the 200-day MA and starts to fade. So the wicking of the 200 would, the touching of it and pulling back would be the first clue. But the doji that it forms as a result is also another clue. And remember, everything is fractal, right? So what we see on one time frame, we can see on another. Well, if we go back to way back here, where all this oil stuff started, what's this? Is this a doji at the top of a bull run? Yeah. Not a much of a different looking candle at all, is it? Except this one's just red. Same effect. So when you see these things, pay attention to them. They don't always mean disaster. But if anything, just take it as a cue that you need to be paying attention. Because on the daily chart, it prints this. What does a chart or print on the 4-hour chart? Something very different. This blue level here is the 6166 level that was projected and obviously has been hit many times. But it's quite interesting to see how it's been relevant in current trading since it's hit it the first time. 4-hour chart gave us a clear buy signal. Again, this could be IBM, Bitcoin, doesn't matter. Right? Clear buy signal. This is the insurance you pay to make sure you're on the right side of the trade and price moves higher. What's this up here? That's the 1,000-day moving average on a 400 on the 4-hour chart. On the daily chart, it's the 200. 9 times out of 10, that's the way it's going to work out. So I know it's the 200 on the daily, and I see the 1,000 on the 4-hour. is look at the tests and the fails. Right, so I'm already nervous as prices approaching the 200 on the daily. I see that the 400 on the 4 hour, and then the big point. What do the points show us? Right, the points that you see on charts like this on short-term averages are just responding to drastic movements in price. That's how they're formed. So one of my mentors would always say, keep your eyes out for points and flats that show up on your indicators. And over time, I realized that, geez, they kind of show up in lots of different indicators, right? These points and flats. And it's because they're, what are our indicators doing? Our technicals are, measuring time, price, volume, momentum, blah, blah, blah. And quick movements in any of those can cause that pointing out or a flattening, as long as the indicator or technical that you're using is responding to short periods of time, right? But these little points and flats have stuck with me for 25 years, and when I see them, this one, when they're pointing up, that's usually an indication that the momentum is moving down, and it does. Did it break one level? Yes. Did it find the next? Yes. Did it break one level? Did it find the next? Yes. Is price still trending down? Yes. This is just the first touch support you're getting on this time frame since you broke it. This is what you kind of expecting to happen, right? That pause. But how we showed on one of the other charts, when you have this type of divergence, as you're approaching these major moving averages, expect them to break, right? That's kind of what they're telling you. As long as this is open, it makes it difficult for price to hold because of the momentum. It might pause like it's doing here, but this trend down is still intact so far. And this has been one massive reversal, right? Like, what do? You wick the 20. What's it looking for? It's coming right back to the 50. But out of interest, just for interest's sake, although these have been two big red days, just make note that this trend is still up. So these are two nasty red candles. I have eyes too. I can see them. But for the sake of learning, let's keep an eye on this to see if these are just going to be red candles in what proves to be a continuation upward. We're here, so this is why we record these things, so that we can come back and check. Because we see this all the time, right? It could fail and come back to the 20 and or the 50. There's all kinds of options, but let's just take note of what the trend is telling us. And we have, one more day left in this week, so it might take a few more trading days to really get our answer, but hopefully by the time we come back on Tuesday, we'll have it. So we will pay close attention to this. And when we look at our weekly chart, what are we looking at? Thin blue line here is the 50. And as all we've done is kind of, these are still 4 green candles in a downtrend, aren't they? We don't have a buy signal on the weekly chart. You're kind of hoping that if you're in early, on the daily, and the daily catches fire, well, you might be off to the races, but there's still a lot of work to do. What you're going to see on, how Bitcoin is facing its resistance now, the same kind of thing we're going to see on oil, right? It's not just going to be one big propeller candle to the upside like a rocket ship. That's not how it's going to work. It's a process of up and down and up and down, and test and fail and succeed, and then test and fail, the next level, succeed. It's a process. It just takes longer than we like. We still have, just bring this out here, this range is still a target. Even though we've had, some nice trading days in oil on, which on the daily chart, those are trading days, Have we had trading months yet that change trend? No, we haven't. And that's really what we're waiting for. But we don't have that yet. Interestingly enough, price is not trading on the monthly even close to the 5 EMA. So we have work to do. Certainly on WTI. Now, you know, we like looking at this chart. I'm going to go straight to the 4-hour. And this is Aster. And still, right? Like, here's the 200. Again, nope, not happening. What's the 200? It's our most basic bull bear indicator. And it does feel like it's having a little bit of an allergy to the 200 MA. And you notice how this breakout failed, and you came back and you've taken out this low here. So what are you looking for when that happens? When that happens, I hate to say it, but you're literally looking for the next level down, the next low. And I don't really see anything here, because here it is down here. Let's see if we can pick up a volume profile yet. So, what's this? This is the lower value range. We've broken it. And now all this gray is light trading, and there's a little bit of a gap here. So, that means that there's more downside risk. This is what it looks like on the daily. On the daily, you're not asking much to come back to this level, are you? So it hasn't been able to catch fire even yet. With all of the hype, it hasn't showed up on the chart yet. Not yet. Not saying that it won't. All these things have a tendency to do this to us, right? Get excited and then they completely sell off, and then one day when you're sleeping, it wakes up before you. What else can we look at for you guys? Let's look at NVIDIA. So today we print a buy signal. When did we actually? Nope. All today. So today is the day that we get our signal on NVIDIA. We don't know what's coming around the corner, right? We just have no idea. It's all we know is how price behaves on the chart. So here we're told to enter. Logically, we're looking for the previous waves highs, which is right in here. And we're looking for that divergence in the T line and the 5 EMA to really open up, which we can't really see on the daily yet, just simply because it's too tight and the signal's still fresh. We need another day or so to see how much divergence is there. But notice this to the right. This is all a gap, right? Here's your upper value range, and this is all a gap. We know that when you see the POC on your charts, understand that it's basically the heaviest shelf, and above and below the POC is going to be a gappy area. You'll just know that instinctively once you see this. So you get a signal here and you start taking out highs, understand that you're going to get into this gap, which, you know, break this level, puts that in play, I guess. Right. Now, fail. And remember, it's all a process. But if price is to pull back, what's on the chart that it might be attracted to? The 200 MA, right? You'd have to break the 20 and the 50 in here, but I mean, that's the 200 moving average down here. And it too is kind of in a gap, but to the downside. So it's going to be interesting to see how this thing wants to roll. If we look at the weekly, you're getting a green candle at the 20, and look, you had a buy candle a couple weeks ago and the trend never broke. Like, yeah, you got a shitty week here, but the trend never broke. But if it does, now that I look at the weekly, this is ugly. You don't like these gaps. And look where the 50 is, right in the middle of it. So you better hope this thing sticks for a while. If you're long, you want it to stick. This is light trading, so any kind of a move down could gain some momentum really fast. Let's look at Lily as well, really quick. Wow. Okay. So I know a bunch of you really like looking at this chart because I know you play it. So are you still in an uptrend on the weekly chart? Absolutely. This is getting a little hooky up here, but yeah, but here's your 20 MA, and there's your upper value range. So if this fades, you haven't produced the sell signal or anything, but if it fades, you're hoping to find support at these levels if you're long, right? And if this is your top of this wave, let's just take where's 618? Or let's start at 50%. So 50% is in and around the 20, and 618 right in here. And this is kind of where time and price could find a way to come together, but I'm assuming that in the not too distant future, you're going to see the 50 in this range. Just by using our fibs and fractal analysis and the filters like we do, you have a pretty powerful system to work with. Having the ability to understand and read the trend, to understand where price may pull back to and what might happen when it does. Right? Not just as a guess, but with some reliability. You know, if you fade here, is this a nice move up because it went parabolic? Absolutely. But you know, as a trader, you're good until this divergence to the upside breaks, and if it was, that this would be a target to the downside, knowing that it would be the first touch will give you, and it might pause or bounce, is what gives you an advantage, because you're working off of the probabilities that already exist, right? The probability of support and a bounce is a lot higher on the first touch than the second. And once you begin to trust your charts and how price behaves on them, then you start to trust yourself. That is an easy say quite often and a hard do. This is just the fibs on the daily. Here's 618 on the daily, and here's your 50%, what it looks like on the daily. And that brings you, you've broken the 50. This is interesting. You've broken the 50, at least for now, printing a sell signal. So a close below the 50 would mean you've broken it, right? If you break one level, you find the next. There's the next level, right in line with the 50% level on the fibs. So what did we just do? We're just overlapping our knowledge and our tools to help give us a higher probability outcome that works in our favor. That's it. Fibs, fractals, and filters. And using the cues that the market gives us. Are you going to be the best pharmaceutical trader in the world? I don't know. Just do what you're told. Just, if this is the time frame you like to trade, well, then you buy those signals and you sell the red ones. We understand what's going on here. If this is the first touch of the 50 on the daily chart and we're not getting any love, that's not good. Now, tomorrow we may close up here, and that's a different story. But right now, you don't want to break the 50 on the daily. Do you want to fall into this gap with all this light trading? With the 200 and the POC and the upper value range all sitting below you? Probably not. Unless you're short. So yes, you can monetize the chart up or down. Right? Monetizing the chart up, monetizing the chart down. Just by doing what we're told. Everybody has a different journey in doing this, in different struggles. what I'm kind of showing you on these charts, I guess if I'm going to be honest, is an example of my, oh, something's going on here, a little bit of a sync since we started, but basically what I'm kind of showing you is my solution to some of the problems that I experienced. Right? When do I buy? When do I sell? How do I know if the thing's still going up or down? Where can I find those areas that, are going to pay me quicker than others? And that's the stuff I struggled with. And I started to fix it by understanding fractal analysis, by understanding just basic fibs, and the filters that we use, right? And there's different ones, from the T-line to the modified Bollinger Bands that I use. But everything that I'm doing is based off of 3 people. And if you want to just do a little reading or research on your own, or just a little YouTube surfing, Benoit Mandelbrot is the kind of the father of fractals in finance. And in many respects, they're quite similar to how you apply Fibonacci. So Leonardo Fibonacci is another one. And Bachelard, Jean-Baptiste Bachelard, another mathematician. He's the filter guy. He's also, the reason that we have ETFs and all the wonderful things. Like, financial math hasn't really changed all that much. It's still based on core principles. But by just using fibs, fractals, and filters, right? Looking the fibs, you're going to look forward, you're going to look backwards, so you don't get hit by something you didn't see coming. The fibs give us areas of, where price may pull back to or may want to move to through retracements and extensions. And the filters, well, that's where we just get on the right side and stay on the right side. We're filtering out all of the noise in this downtrend by just following what our filter's telling us. We have a handful of rules. First attempts, all that kind of stuff. Break one level, find the next, and look for those big gaps. These are the things that troubled me for years, right? And I could never, I think I'd fix one thing and then I'd have more problems with another, and it was always a constant struggle. And I sensed that struggle in, what a lot of you have too. So what I'm showing you here is just my answer to a lot of my own issues that I experienced when I started doing this. I'm not saying it's going to be the solution for everyone, I get it. But what we have done is we've taken some complex things and we've distilled them down into a very simplistic way, but powerful way, of tracking and trapping price on a chart, so that you have the opportunity to monetize that chart, because that is the only job, is to monetize. Not to be right or wrong, but to simply monetize the chart and to protect yourself from downside risk. Right? And that's all we're trying to do. And by using fractals, showing you where price may want to go in the event of a change in trend on any time frame is helpful. Right? So I know it's repetition, and sometimes it's like, oh my God, it's boring. Yeah, it can be boring but powerful. Right? And once this is going to be a rhythm, the idea is to make it instinctive. When you see price touching a level for a first time after a big move in the other direction, you can anticipate what's going to happen, and understanding that is going to save you a lot of stress. This script is available both on TradingView as a private script, so you have to reach out to me. You can follow me at BlunthouseTA. It's now going to be available on TrendSpider as well. And if you're not signed up for TrendSpider, that's a system that I really love just as much as TradingView. You can check it out. They have free trials. When you sign up, use BL25, and that'll save you probably 25%, I think. Until next week, though, I want you to have a safe and happy weekend, and we will catch you on Tuesday. And if you have any questions about what we do in the meantime, feel free to reach out to me. Until then, have a great weekend, everyone, and